The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, good morning. I've got a couple of charts here I want to go through today, but I've had a question come in from one of our favorite dinners, Mr. Z, and he asked me a question about the Fibonacci number of 1.27 and when I first discovered it. I knew 1.618 because that was all part of Elliott wave stuff, because Ralph Elliott, when he was promoted by Charles Collins back in 1938, he used, basically four ratios: 382, 50%, 61%, and 1.618. That's what he used. He didn't use the, square roots of the numbers of the Fibonacci numbers because I don't think that he knew them. But that doesn't mean the theory is not wrong or anything. It's just that he had not been exposed to them. But my main experience was the 1.27 when I was in Switzerland. And I had I was giving a speech for some bankers, and I was giving a speech, and I had gotten stopped out at the exact high on three monster moves. I mean, I was on the right side of the market, but I got stopped out, and then they just went absolutely the other way. So I was sitting there scratching my head in the room trying to figure out what was wrong. And I saw, 1.27. It didn't mean too much to me. And then I was messing around with my calculator, and I accidentally hit the square root of 1.618, and voila, there was 1.27. I didn't understand what the hell it meant until 2 years later when I met Bryce Gilmore, and he explained to me the relationships of all the numbers of the summation series of Fibonacci and the square roots of 5 and their reciprocals. That basically discovers everything. The problem is you get too darn many numbers, and that's where people get confused. So I primarily use 618, 786, 1.27, and 1.618. The first chart that I posted in here today is the biotech index, and you can see it's making a double 1.618 number up into that area, and we'll see what happens. Another question that someone's asked me this morning was how I got involved with speaking and stuff and teaching. That goes way back into 1986. I was invited to go to Germany by a friend of Ed Dobson who owned Traders Press, and they wanted someone to talk about Fibonacci. And at that time, Fibonacci was the F word. Hell, nobody knew what it was. And so I went to Frankfurt, and they had about 50 people there. It was a 3-hour nighttime meeting. It started at 6 to go to about 9, and everybody in the room was German. They didn't have anybody there. They all spoke English was a second language. So I started giving my speech, and I said, something about a new moon, and all of a sudden, about a third of the room got up and headed for the door. And I said, whoa, I said, lock the door. I told the guy that was at the door, I said, don't let anybody out. Tell me what's going on. And they were all speaking in German and back, and, it was just really funny. And they said, they think you're full of shizes. And if those of you that don't understand what shizes is, it's the stuff in the bottom part of a diaper. And I said, yeah, maybe it's true. I said, but look, this is a free seminar for you guys. You don't have to do anything. You're here for free. That's been paid for by the promoters, the brokerage firm that sent me over here. So why don't you just listen for a little bit? And if you don't like it, we'll see what happens. So they went through, they enjoyed it at the end of the thing. And what they wanted to do was they wanted to do a longer term one. And I says, why don't we do a 2-day seminar? And we'll do it this way. I'll do 1 day of teaching and 2 days of trading. I'll teach the first day and also trade, and I'll trade the second day. And not only that, but I'll make a guarantee that if we don't make money on both of those days, I will refund your money. And the promoters of the place went absolutely. They came up to me, grabbed me, and said, please don't do that, we're going to lose. I said, you're not going to lose. I said, I made the guarantee, not you. He said, you really feel that strongly about it? And I said, sure. And I said, not only that, I said, I'll give them 6 things to trade, and we'll see if we can get them to trade it. The next part of this story is what's so funny is because we went through the first day and everything went really well, and we had a really good day trading. We were basically trading the S&P and bonds. But on day two, I split them up. There were 25 people. I put them into 5 groups. Each group got something. One got the grains, one got the metals, one got the crude oil complex. Another one got the foreign exchange, and the other one got the softs. And everybody had to come up with a trade based on the little patterns that we were looking at. Basically, I was just looking at ABCDs and Gartleys. That's all it was. And the best pattern of the whole day was the soybean trade. And the group in the grains, they saw the soybean trade, but one of the people brought in the Wall Street Journal from Europe, and on the front page it said that the massive supplies in soybeans, were lead to much lower prices, and beans were making a perfect Gartley ABCD pattern right at the 618. If they would be down about 10 cents. I needed to get down about 10 cents to complete the thing, and this was the kind of thing that would do it. And they decided that there were 5 people in the group, and they had to vote whether they were going to take the trade or not, and it was my money, it wasn't their money. And so they voted, and there were four people voted to buy the beans. And the one guy who had the Wall Street Journal, he wouldn't have anything to do with it. He was a fundamentalist. And so we started out trading that day, and the beans course didn't open for a couple hours because we were trading out of Germany. So we had double hours trading. That was another reason I did it. I knew I would have plenty of time to take a look at this if I had a chance of watching this. So anyway, we started trading, and we had a couple of easy winners, which meant that I wasn't going to have to pay anybody back, which took a lot of pressure off of me. So the beans were due to open, and so I called the floor, and I asked, I said, what's the indication on beans? And the indication was 5 to 10 lower, and they said, okay. And so I said, look, you either have to put the order in 10 lower, like it's supposed to be, and you put a 10-cent stop in it. If it goes to 10 cents, you're down 20, you lose the $500. I lose the $500. And, it just didn't work. It's just a probability. Okay. To make the long story short, the beans opened 10 cents lower and went 1 cent under our fill, so that we were filled. Okay. In the first half hour, beans were unchanged on the day. At the end of the second hour, they were locked limit up. It was the biggest move of the whole 2 days, and it was the biggest thing going. And it really, the funny part about this was, you should have seen the reaction of the group of 5. It was like they all were together on it. Even the guy that had the Wall Street Journal was involved. And Dad, see how great we are. And they were the ones that didn't want to do the trades because of the news. Anyway, that's neither here nor there. Okay, boys and girls, I'm a technician, and I know jack diddly about most of this stuff, as you probably know. But there's a perfect storm brewing in this market, and I'm not sure whether I can demonstrate it very well or not, but I want to give it to you right here, give you my 2 cents worth. Remember, this is all just what do you call it? Technical stuff. Okay, here's the October NASDAQ, QQQ. That going back to October, I'd like you to take a look at this, because you have 3 major ABCDs that are completing here. You also have the 1, 2, 3, 4, 5 expanding triangle completing right now. But I think if you'll look, I put some Fibonacci fan lines on here to show you the strength of this up move. If you'll notice that from the low from July the 6th to where we are right now is about an 82-degree line. I mean, you can only go to 90, and that's straight up. Only Google goes straight up. And of course, Google is part of this. But I went back and I looked at all of the NASDAQ moves, including the one went from October, which was the major bottom. That one went straight up. I mean, everybody saw that one last year. And it didn't even run nearly the ascent of what we're having now. And remember, when Google went up the other day, up $90-some, the price of Google increased more than 400 of the stocks in the S&P 500. 80% of the stocks in the S&P 500 did not increase as much as Google did on one day on the earnings. And we know how they do these earnings. That this is why, it's an absolute mortal lock that, Apple is probably going to have some type of, a monster earnings again today, and everybody's going to buy an iWatch. And I'll tell you, that to me is a flat-out dud. I've seen those, and that's that is, I wouldn't take one if they gave me one free, I'd give it to my grandson, but I could never use it because I got chubby little fingers anyway. But I don't see that. Maybe the third generations and stuff will be okay, but that's pretty much, and we'll see what happens. But we're right at the 1.618 expansion. In fact, if you look at the Nasdaq chart that I posted in there, you'll see that you have a triple 1.618 because we had that triple top where the market broke out of, and now we've expanded to the 1.618 of that. This is the pattern, folks. You have triple A, B, C, D pattern there. You have a triple 1.618 expansions. You have a rate of ascent that is about as strong as you can get. And one of the things that Amos Hofstadter used to do at Commodity Corporation is when he was getting ready to do something, he would turn the chart upside down to see if it made as much sense going long as it would be going short. So keep that in mind. We have falling commodity prices. That's usually not good for the market because that means that things are not doing too well. We have a transportation index that's in a very, very steep downtrend. It's had just marginal rallies. That's another thing that makes you look at it. If you looked at the advanced decline line yesterday, folks, on the NASDAQ, there were twice as many stocks that went down on the big NASDAQ than went up. That's not the 100. That's just the big NASDAQ, okay? Twice as many stocks went down. The number of new highs to new lows in the market yesterday also increased. More new lows yesterday were made over the last several days than new highs. That's another thing that's very interesting. We'll just take a quick look at this advanced decline line so you can see what I'm talking about, and then we've got to pay a few bills here for Mr. O'Brien, and then we'll see what happens. And then we will go on to phase 2 of this, and we'll see what's happening with some of these things. So that's what we're looking at this morning. We've got the Dow due to open about 70 lower, it looks like, and the S&P is going to be down just a little bit, but the rest of it looks like it wants to probably go a little bit higher. Who knows? Okay, boys and girls, see what else we have here. The stocks will be open pretty soon, and we'll see what's happening. Okay, we'll be back in just a few minutes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I put in a chart of Alcoa aluminum. As you can see, it's been going down quite a bit. The cost of their product has been going down, and so the cost of their sales have been going down, and I guess that's why the stock has been going down. This is not, it's very dramatic here, but it pretty much shows what's been happening to rubber and oh gosh, crude oil and a whole bunch of other things. Gold and silver, of course, have made new lows on the, this big run here, which is pretty substantial. So the lower commodity prices usually means that there's something not right out there. When you look at the Dow Jones transportations and see how bearish it looks, you have to ask yourself, well, how are they getting these products to the people? I mean, they're not shipping them by airlines, that's for sure. And but you look at the Dow Jones transportations, and we've been coming down ever since November. And I know the Dow theory doesn't mean too much anymore. Yesterday, I couldn't believe what I heard. At the end of the day, I always kind of watch CNBC because I like to watch the Fast Money show because they put their recommendations out. And the one guy, one of the Nigerian brothers, said that the Dow was really an index that didn't really mean anything anymore, and they probably should find something else. And he said the same thing was true of the VIX index, because now we have the VIX index has made new 9-month lows yesterday, and the whole world doesn't there's no one to cover their back now, because there's no need to, because evidently the Federal Reserve will cover everybody's back, just like what happened with China. And that's possibly what could happen, that we could change capitalism the way it is. But the way that I see it, there's something really big getting ready to happen, folks, and it's not going to be nice. The people that have been in these stocks, it's going to be pretty much like what happened in China when they try to get out. It's going to be pretty nasty. Now, it's pretty hard to not expect Apple to have good news, because I think the odds on that are better than 80%. In other words, 80% of the time after Apple's earnings are released, the stock goes up a great deal. So you don't want to fade that 8 out of 10. But the rest of those NASDAQ stocks, I think, Amgen, with these breakaway gaps that we've had, and also in Facebook, and if you look at all of them, it's just really quite amazing. The 10 stocks, basically controlling the whole thing. And now PayPal has come in, and it's bigger than Netflix. So it's going to be a real interesting summer, as they say in the trade. So we'll just have to wait and see. Okay, now let's move on to the gold market, because we want to take a look here. If I can find it, where are you, gold? There you go. Yesterday in gold, I mean, you had to be following this a little bit closely, but and nothing's really happened yet. But yesterday we did make a Gartley pattern in gold at the exact 61% retracement of the rally high that we made yesterday. And so far, all we've done is gone up to the 618 of the previous high in the gold. Nothing's really changed. We did exactly the same thing in silver. We've made the bigger objectives. There's only one other objective outstanding on these big ABCs that I have on the daily, and that comes in at 1065. We got down. Let's try it. 1065. We got down to 1080 yesterday, and then we rallied from 1080. We rallied $38 up to 1118. We pulled back down to the 61% retracement at 1095, and now we're sitting there, doing pretty much nothing. At least it hasn't collapsed anymore, but it certainly has not gone up. That's the bottom line of what we're watching on here. Silver has done pretty much the same thing that the gold has done, so we're pretty much doing the same thing in both of the precious metals. The question that someone has asked me is, what do you think it would take to turn the market down? Folks, the market is going down. I mean, if you look at the New York Stock Exchange Index, which is most of the stocks, they are in downtrends, and we've never gone higher than the 61% retracement. The last 2 days, it's been down. It's just the NASDAQ. It's those 10 stocks in the NASDAQ that is doing the whole thing. And if you weren't here back in 2000, that was the same thing that was occurring in 2000. The Dow had topped 3 months earlier, and it was March 24th. That we were making this same type of pattern that we're making here in the NASDAQ. This is as clear a sell pattern that I can see in the NASDAQ 100 as you could possibly get. This is a perfect storm. The storm might land on my head, but this is a perfect storm, folks. You have 3 ABCDs on the weekly pattern, correct? You have 3 1.618 expansions that go up to around 46.90. We got the 46.86, I believe, was the high last night, somewhere in that ballpark. So that's the type of thing that you live for. As I always say, it's mother, God, and country. If you believe in this stuff, you got to do it. You got to just have to be able to do it. That's all I can tell you. And it may not work, but gosh, it's got everything there to tell you that this is what you should be doing, whether it's the right thing to do or not.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metals CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to share a chart with you from my friend Andy Fink in Berlin, Germany. He's a excellent trader, and he forwarded this chart on to me this morning. It's something that we were going to discuss, but I'd like for you to take a look at this. This is the dollar index chart, and it shows that we're completing a beautiful ABCD pattern there, right where we are pretty much right now. And so we're going to see if this is going to be a place where the dollar might start to back off a bit, but we'll see. We're at this 98 level. We'll have to let it determine, but we're definitely making an ABCD. What's important there, folks, if you'll look at the slope of those lines, what we talked about with the NASDAQ, you can see once markets go up at a near 90-degree angle, they come down pretty much the same way. That's the same situation that we have in the NASDAQ. And of course, we have Apple earnings today, and should something happen that the Apple earnings would be bad, the Apple happens to be 14% of the NASDAQ, which would not be too kind to the NASDAQ. It might even have a down day, possibly. That's not a guarantee, but there's a possibility that if the earnings for Apple were really bad, you might have a down day in the market. Now, we also have a situation that one of the other stocks that is in the top 10 for the NASDAQ is Softy. Microsoft will be coming out with earnings today, and it's setting right at the 61% retracement up there at $47 a share. It's been up 10 days in a row since July the 6th, and it's basically been going sideways since November. We've had a couple of lower highs. We had a double top, of course, back on May 1st. Then we came down, touched the 61% retracement right at that 20-minute line, and now we're at the 61% retracement on the daily. So that's another one that we want to watch. Now, I did want to take a few minutes here to I posted the IBB chart earlier in the morning. That was the first chart that I posted in, but I wanted to expand upon that just a little bit, because if we look at this going back over the past 6 years, you can see from the low we made down in 2011, we had the move up into 2014 where it went 5 times its value. It pulled back to exactly 382 at point C, and now we've gone up to the 1.618 expansion at 400. The number was 399.63, and yesterday the IBB hit 400.13. So that would be pretty much spot on of what we're looking at. I've checked the stocks in the IBB. They're all doing pretty much the same patterns. There are a few that are not going on, but that's pretty much what's happening with these particular things that were going on. I started this show about the perfect storm in the NASDAQ, and that's pretty much how I see it. And I'm a technician, but that's the sum total of all the buying and selling that I see. You cannot get a better signal than you have in the NASDAQ. I mean, you have triple ABCD patterns measuring within 1% of each other, which tells you that there's a great deal of harmony there. And then to top that off, you have 3 1.618 expansions off of various swings, telling you that's where you are. So, and it's just, 10 stocks that have been doing all of it. So we'll see. So we'll see what's happening. They'll give you another chance to buy Apple. It's actually must be down about $0.50. Get another chance to buy it, which makes good sense because it's been going up, no question about it. Okay, now I wanted to show you yesterday what happened in the stock market, just to give you an idea of where the action is, and you'll see here that we'll take a look here at the. Someone says that the pullback will be like a thief in the night. That's probably true. What we have here is we have the New York Stock Exchange. As you can see, the most active issues, the most active 10 issues that were on the New York Stock Exchange yesterday. 9 out of the 10. These are the most active there. All of them but one. Bank of America was up 10.1%. But if you look at the NASDAQ, you had stocks that were, Excel was up 50%, Apple up 1.8, PayPal was up 5%. That was a new issue coming out. Through another 3% in Facebook, Micron. And then you had eBay was up 2%. One stock was down. So of the 10 stocks there, you had 7 up and 3 down. So it shows you the NASDAQ is where the real players are, and that's the big game in town. So that's the main thing that you want to be looking at. If we take a look at the new highs to new lows yesterday, I wanted to bring this out to let you see what's happening. You'll see that we had more new lows and new highs again, which has not been a big surprise than anything. And then also we'll take a quick look here at the advanced decline line, and you'll see that we have the same situation going with the advanced decline line that we have with the new highs to new lows. So the breadth of the market is not as nice as you would like to see. We'll see what's happening, but we'll have to wait and see what's going on. Now remember, on the Dow. The Dow's down 100 right now, but folks, remember the Dow is price weighted. It's not cap weighted, and it's better for it to be cap weighted like the New York Stock Exchange Index is, because that tells you that you are pretty much you're valuing the stock for what it's worth. I don't know if you folks have ever seen the breakdown of this recently, but Business Insider just showed how PayPal, the first day in PayPal, it became so big. But you'll notice that the biggest cap stock, of course, is Apple at 759 billion, and then just under that would be Google, about 450. Microsoft, gosh, can you believe Google is bigger than Microsoft? Boy, that's amazing. And look at Facebook, 4 years old, folks, and it's already at 268 billion, the fourth largest stock in the world, and that's truly amazing. Just to give you an idea, on Google, when it was up, I don't know, when Google was up $4. Larry Page and Sergio both made $4 billion the day that Google was up 90 points. Just to give you an idea how much money that is, in 1929, Charles Schwab bought U.S. Steel from Andrew Carnegie for $400 million. Now, that's not the same. $400 million back in 1929 is not the same, because there's a 10 times difference, but that would have been $4 billion in 1929. They both could have bought U.S. Steel on just the one day that the thing that they had going in Google. Now, that's not to say there's a bubble out there, because that doesn't happen. That could never happen. The interesting one is down here is that little tiny bird at the bottom, which I guess is Twitter, and it's not doing too well. eBay, look how big it used to be, and it's not nearly as big as it used to be. So, some of these stocks can have a little bit of a problem. All I can tell you, folks, markets that go up parabolically like we have in the NASDAQ, they end the same way. You can't find one that doesn't end that way. That's Isaac Newton's law, and that's pretty much, would be able to think, and that's it. One of the folks in the Tiger Den said it's probably best to wait for Apple for earnings to come out, and that's probably true for two reasons. First of all, if you got the other stocks have sold off a little bit, and the earnings for Apple come out, they will give the NASDAQ a boost, and you'll be able to sell a retracement. So that's the best way to do it. Frankly, I thought the best way to do it this morning when I was looking at that is, I don't like puts and calls very much, but when you look at this pattern that we have in the NASDAQ with, these are just patterns, folks. I don't understand the fundamentals, and I couldn't operate I probably couldn't even tell time on an Apple Watch. That's how complicated it is. But the best way to probably do it would be to buy a put this morning. And I would be looking at an August put. That gives you a month to play with it, and maybe it goes up another month. But if you buy the put, you're limited to your risk, and if you're right, they're not going to cost very much, because everybody thinks they're going to go straight up. So you got a whole lot of things telling you that's probably the best way to do it. You have a reduced risk and an unlimited profit, and that's the ideal situation. So we'll see if they will be. Whether that works or not, we'll have to, wait and see. That's what we're watching here. Okay, now we have a question about crude oil. Now, crude oil has held up extremely well, given the fact that we've had a lot of stuff happening with some of these things. See, we had a chance to buy the market down here just a little while ago, and somebody didn't pay attention. Hold on just a second here. We want to pull up the crude oil so we can see where we are. We've held up really well, above $50 a barrel. We went below it for just a tiny bit, and considering what's happened to the rest of the market, folks, this has been it's been really really something quite amazing. Now, if you believe in Fibonacci numbers, which I know some of you do, you'll notice that the low that we had yesterday, and we made a slightly lower low today, both of those lows came in exactly at the 61% retracement at 49.88, and the low yesterday was 49.85, and the low today was 49.77. So that pretty much tells you that 61% retracement is holding up pretty nicely, is what I would think of looking at this the way that it is right now. So crude oil has a potential, to have a pretty good rally in here. Now we should take a look also at the gasoline, because that's probably one of the primary uses of this stuff is the gasoline, and you'll be able to see here that we came down and stopped exactly at a 1.27 of a previous move, and also at the 786 of the low that we made back in March. Stopped exactly at the 618 on that one too. There's a really good chance here, folks, that this gasoline and crude oil have bottomed. Actually, gasoline bottomed several days ago and has held up, relatively well. But it's barely made a 382 retracement of the whole move from January. From January to June, we just barely made a 382 retracement 3 days ago in the gasoline. So with crude oil hitting exactly 61%, and the XRB, which is the gasoline futures, hitting exactly 382, that tells us pretty much what we're looking at here in the market. Now, we don't expect this market to go straight down, folks, because every time it's gone down, it has come back really strong. So I don't think there's going to be a surprise. It's going to make anything happen. But when it does start down, it will fall of its own weight. Prices go down faster than they go up because fear is a greater emotion than greed, and you shouldn't forget that, because that's a very important market principle that you should always try to remember. That's from the 2 cents from the cheap seats. We're going to cover bonds here after we have the break here. I don't see where we've made some pretty good retracements here in bonds the last couple of days, but they still look like on the longer term picture that the bonds certainly want to go down, is what it looks like from right here. Just give me a second. I want to do the German bond too, because that's an interesting one. That's their 30-year bond of Europe, and we'll put up the U.S. bond first. We see that we made the 61% retracement yesterday, and then the next one we're going to look at. We've got to pay a few bills here in just a minute, and then we will come back and look at the Bund from Germany, and we'll see what's happening, with that. The euro, I've already showed you the U.S. dollar index. We might start getting some strength in the euro here based on what the U.S. dollar is. But remember, a lot of that is based on the Australian dollar and the Canadian dollar and the New Zealand dollar and the Swiss franc, all of those that have been going into the toilet. So, the U.S. dollar was strong. So there's a lot of things going on in the currency markets that you need to pay attention to. So that's what I see right now as we get ready for our mid-morning break here. If you give me 1 second here, I wanted to get together and I wanted to show you the Australian dollar, what's happened to it. I mentioned the New Zealand dollar a few times the other day, but I didn't post a chart. But we will look at the Australian dollar, which is all related to the commodities, because they do so much in the commodity business, and we are setting down here, made new lows here, and we've made a butterfly bottom. We've got a little bit farther to go here in the Australian dollar possibly, but all the things are there to tell us that we're able to see if this is going to be the case here with the Australian dollar. The Australian dollar and the New Zealand dollar, they look very, very similar. That's basically what we're watching here. So, okay, now we'll have to see what happens at the rest of the day, and then tomorrow will be Apple. My guess is that Apple will probably open somewhere between 136 and 142. The 142 would be the 1.618 expansion of that whole move. And since it's 14% of the NASDAQ, you could see the NASDAQ get above 4,700, which would be right at the top end of that 1.618 expansion. It would be right back after these few words, and we'll look at the German bond and the Dow Jones.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've had a request to take a look at Apple. I posted in the daily chart with the fib levels. Gives a target of 137 to 142. It's down a little bit this morning, just a sell-off, but whether that maybe it's a double top there, I don't know. Just the overall market, stock market is just extremely showing very, very bad underlying breadth of the market. In other words, the number of new lows to new highs looks very, very suspect. And we'll take a look here at the Dow Jones, and we'll see where we are with the Dow. We're down quite a bit. What are we down? About 80 or so, I guess. And we did. Looks like we might have topped on that new moon. We'll wait and see. But that's pretty much what we're looking at here. with the Dow. We've been going on for about a half an hour, so the market's bouncing back a little bit. And the reason why, it's very simple, why the market's bouncing back after a lower opening, folks, there's a thing called short covering. And anybody that has ever put a short position on and knows when the market starts to rally, that gives you that warm, cushy feeling known in Germany as Scheißes in the Gummihosens. And you don't like to see that happen. And that's why you start seeing these big snapback rallies. And we know the S&P can move very, very quickly during that time. So I'd like to just end the show with going over what I think is the most important thing that I've looked at today, and that is the pattern in the NASDAQ 100. We have three major ABCD patterns over the last 9 months, all coming together at the same price within about 10 points. We have three 1.618 expansions coming in at that point. So remember, this is all technical stuff, folks. This has nothing to do with any fundamentals or quantitative easing or anything like that. This is just a pattern that I look at that says if this has happened once, it's happened before. We're also looking at a NASDAQ 100 that is going up at about an 82% slope. 90% is straight up. So this is the strongest 10-day move that we've had in years in the based on the slope of the line. The amount of the dollar amount isn't the most, but how quickly it got there is so very important. This is how moves end, folks. They explode to the upside, leaving gaps all the way, like we've had in Amgen and Facebook and Google and all the others. I mean, except Microsoft hasn't, of course, but that's what we're looking at. So that's what we're looking at, folks. So live every day in an attitude of gratitude and try to do something nice for someone who has a little less than you today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.